What's going on, everyone? Welcome back. Good morning. Thanks for tuning in. We got Taz on the stream today. We got Captain Taz. He is the captain of the largest airline in the world. Welcome, Taz. Welcome. Good to see you again.
Good to see you too, man. Thanks.
So we got a special day today. If you didn't know, I'm sure you do. Happy CPI day, everybody. It's going to be an exciting day. Not sure how much trading we'll get in front of CPI, but CPI itself will be a killer trading opportunity. I mean, you can make so much money on gold during CPI later at 8:30. It's going to be insane. But looking at the planned economic events we got going on today, we have CPI at 8:30, obviously. Unemployment claims at 8:30 a.m. as well. Crude oil inventories at 11 o'clock. And that's all she wrote. All you really got to care about is what happens at 8:30. And the census is, people are thinking it's going to be a hot CPI print. Well, so the forecast is 8.3 or 8.1%, so it's supposed to be down, but Wall Street's thinking hot CPI print. I'm thinking hot CPI print, so we'll see what happens. But if we get a hot CPI print over 8.1%, then expect a nice dipsy daisies. So we'll see. As we get closer to that, we'll kind of break down our CPI analysis, but let's see what's going on in the markets right now and see if we have any other trading opportunities that we could take advantage of before CPI. So taking a look at the dollar, kind of doing exactly what I expected. It does this every CPI print. I guess maybe even every major news event is we just sit here in we find our consolidation zone and we sit in it until CPI comes out. And so here's our consolidation zone, not breaking above it, not breaking below it. We're just sitting in it. And so bottom side sell range of the dollar is going to be 113 on the dot. Up range to the upside is going to be 113.550. And once we break one way or the other, there we go. That's what you have. So it's going to be like that most likely for the next week or two. That's going to be the direction we head. So definitely keep an eye on it. I mean, the dollar most likely going to maintain its range in here until CPI comes out in an hour and 20 minutes. So probably don't have much. It's probably won't weigh too much on trading opportunities today. So that's that. Looking at rates, kind of the same story. Sitting in here, wedging right near its previous 4.0 highs. And so same thing. We'll see which way the rates go. If we get a hot CPI print, you're probably going to see rates go up. You're probably going to see the rates and the dollar soar. And so I'll talk about that later. But regardless, we're kind of consolidating in this pretty tight range here. So we'll see what happens there. The equities, the markets, I mean, it's really what you should expect, and really what happens all the time is everything just sits in this tight range until CPI. So not sure how much we'll get today. But regardless, equities are sitting here. Bottom side at the range is 35.80. That's going to be the area to watch here. Honestly, the fact that we're sitting right at 3,600 is telling you exactly what to expect here, because 3,600 is the battleground for the bulls and bears here, and that's what you've seen the last couple weeks here. And so we're now sitting here, and June lows are going to be right here at 36.41, and we're sitting at 36.08, so well below June lows, and so you could probably find that as some resistance today. However, it won't be resistance if we get a weak CPI print, a cooling off. However, we are maintaining this pretty tight range. As you can see, we've had a larger daily range here, and now we're getting tighter and we're getting tighter, and we're just waiting for CPI. So I'd expect the equities to reject the highs in here and roll back over into the morning open, or I guess into the CPI print Don't expect to start rallying here. If we start rallying in front of CPI, expect 36.30 to run into resistance, and then we'll probably sell off from there. But we'll see. Regardless, not really a good range to trade the equities today. Obviously, I wouldn't be. It's too early to trade equities, and 8:30 is when CPI is. So not really going to be trading equities today. Not really much to go over right now. So we'll just take a look at it as we get closer to CPI. Gold is going to be the best trader today. That's what I'm going to be focusing all my attention on. CPI will give us some massive opportunities for gold today. And so taking a look at the 4-hour chart, I talked about the 1660 area. 1660 is this is the battleground here for the bulls and bears, and once we give up 1660, we're going down to 1500s. And then again, I talked about this daily consolidation range that we're sitting in, and I mentioned we're not going to get a breakout until a fundamental news, until we get maybe CPI comes out, and CPI comes, so CPI is today. And so you could have anticipated that gold was going to maintain a range in here until we get that news event. And so that's what you're seeing. You could have just traded the range play here. Looking at gold now, rejecting the upper end of the range here of 1680 from the last few days, and now we're leaking off a little bit, heading back down towards low. So could be a potential nice short if you wanted to trade in front of CPI. Not sure I'm going to trade in front of CPI. If I did, ideally we see a retest of VWAP, a retest of the 1675 area where we had this double top rejection and this bearish engulfing, and then I look for sells heading back down towards 1670 around a 50 pip move there. But the main play is going to be with CPI, but pretty clean price action if you're looking to trade some gold today. I mean, this move up that we had overnight through London session, pretty clean. Not too much contention there. And so now what I'd expect is for gold to start slowly working its way down through that London session move and reversing this entire London session. And so once CPI comes out, it's a clean slate, and there's no really gap in price from London to Asian because you had Asian session drop here, right? You had London session. Once London opened, we had that London move, filled this entire Asian session gap, and now what you can expect heading into CPI is New York to start filtering back down and filling this London session move, and then we're in this range here that we've maintained, and heading into CPI you have your levels, and then it will most likely head down with a hot CPI print. But we'll see. But regardless, I mean, looking for plays in gold today, I'd like to see one more retest of highs here, and then I'll look for a short back down. So we'll see with that one. Oil probably won't move much off CPI. It doesn't really ever move too much because it just kind of does its own thing, has its own fundamentals to worry about. You do have the oil inventories at 11, which could play some factor into the directional bias. But if you take a look at the overall move here, you have the OPEC came out on October 5th right here and announced that they're doing the 2 million barrel per day production cut. And that's where we came down yesterday and came back to retest because Russia came out and said they don't have to do any production cut because they are already producing well under the quota that they came out with. So people said, okay, so this production cut doesn't mean anything. So they came back down, drove the price right back down to where the scene of the crime was, where the news came out. And so now that's where we bounced from. And now we're starting with a clean slate. We filled that move back down, came back down to retest this 87. And I talked about this 87. If we break 87, we're done. Oil's heading back down. This is really what you need. If you're a bull with oil here, you're going to need to see 87 hold. If it starts breaking through 87, this is the major battleground we've seen for the bulls and bears, and we'll pop right back down to 70s. if we give up 87. So looking at 4-hour structure here, we are basing very nicely here at this 87 mark. Had a nice bullish engulfing last 4-hour. Current 4-hour is printing really nicely. We have this retest wick. We're now absorbing that move above this 87.30. And so assuming oil will flip bullish here, we could have a nice move back up towards 88 and then potentially even farther if we get some decent volume in it today and news. So buys on oil are looking decent against this 87 mark. This 87 mark is very important. So it's a very strong area to buy off of. Not sure I'm going to trade it though. Doesn't have that clean of a range, to be honest. Maybe on the 1 hour, 30 minutes kind of choppy. If the 1 hour closes bullish engulfing against this 87.30 here, then I'll look for a long and a continuation through this previous move here. We had a nice move overnight at London session, filled that move, and now you can expect potentially a grind back up towards 88.30 if we get that nice bullish engulfing. Simon, what's up, Simon? What's going on? What's going on? Oh, I see Nick and John in the chat as well. Good morning, guys. Good morning, everybody. But yeah, so oil, gonna be more patient with this one. The problem is if I'd wait till an hourly bullish engulfing, that's 8 o'clock and that's 30 minutes before CPI. So going to be probably sit on my hands until CPI. It seems like everything's waiting until that news event gets over with. So I'm going to wait on that one. Gold is actually pushing back up now to give us that second retest of this range here. So potential shorts here. I'd like to short it here, but I don't really like to short it here because we're an hour away from CPI, so we'll see. Right on time, V. GJ analysis. I was just about to hop into GJ, so perfect timing. I like the bullish continuation here. I mean, so we have this really strong contention area at 162.500. Very strong pivot point here that we've now closed. Massive bullish candlestick yesterday, closed above it. This current daily candlestick came down, wicked it, and we're now heading up pretty strong through that zone. And so next pivot point that we'd expect GJ to reach is going to be this 165 even area, this 165 quarter point, which is now 100 pips away. We're actually moving very strongly out of the gate right here. We had this nice retest and then run. Not sure I'd be comfortable with buying it here because we are so overextended. I mean, the move from London session here has been just a tear. And so it doesn't really make me too comfortable. I mean, I do like the bullish continuation here, but I don't like to chase price. I don't like to buy on an overextended move here. And so if I were to buy GJ, it would have to be on some type of retracement of this move, and then I'll look for longs to bounce back up towards highs. Not really interested in shorts because of the price we're in. Now that we've reclaimed 162.500, which is the battleground for GJ, as you can see here. Now that we reclaimed 162.500, buys are in play and bulls are now in control here. And so I'd like to take buys, but I don't like to buy on extended price action here after this move. And so I would like to see buys on any type of pullback, support being formed. Then I'll look for longs for continuation towards highs. So that's the ideal play for me. If I get it, great. If I don't, I'll gladly miss out on this move because I don't feel comfortable buying all the way up here. And again, CPI is so close that, and GJ will have some pretty crazy movements off of CPI. So be careful with that because CPI is in an hour. And what I'm looking for is not going to play out an hour. It'll take like maybe 2 hours to get this pullback, maybe 30 minutes to base and then another 30 minutes to run. So it's like we're talking like 2.5 hours of price action to get what my potential setup would be, which is heading into really a nice open and at that point CPI is well over with. So not really going to be messing with GJ today, mainly because we have CPI. But yeah, I mean, that's really everything in a nutshell I'm looking at today. So I mean, to sum it all up, probably not going to trade until CPI, but we'll kind of cover some chart setups here and cover things as the market progresses. But Taz, I'll bring you on. I know you had some trading going on. I know you're doing well with your challenge. What have you been? You know, great now. I mean, GJ break it consolidation. Would you sell GJ before CPI? So you're in GJ. I assume the break of what this previous consolidation here. Sorry, did you buy like on the break of this, or did you buy on the break of this consolidation? So that makes a big difference. I mean, if you bought on the break of this consolidation here, then you're in a great position. And honestly, you'll probably be able to reach 164,400, and that's probably where I'd end up selling, because we'd probably meet some resistance there and then start rolling over in front of CPI. At that point, you're in the money, you know, over 100 pips. 162,500. Oh yeah, you're in a great position. You're up 50 pips. You could probably get it to 400, and at that point, you'll be up 90 pips. And so I would absolutely look to take like probably all my entire position off in the 400 area, because you have CPI today. So because then look, it'll be up 200 pips on the day, the overall move on GJ, and you have CPI, and it's super overextended, and so you're going to be met with a lot of resistance here. So most likely you get a decent pullback and it starts filtering back down in front of CPI. So I would definitely look to sell your entire position in front of CPI, maybe around the 164,400 area. But you're 162,500. Bruh. Fuck, you're up 160 pips. You'll be up 200 pip. Yeah, fuck, dude. You'll be up about 200 pips in a second. So I'll look to sell into 200 pips, but that's all. Yeah, it's impressive. Good catch on that one. But yeah, what's going on, Taz? I'm gonna bring you on now. I wanna chat with you about your trades, because we got some time to kill in front of CPI. And while Taz is going over his trades, if anybody else has any questions we can cover later, feel free to hop it in the chat. But Taz, what's going on, buddy?
Hey, good to be here with you.
Captain Taz, doing? I feel blessed to have you on the stream today.
Thanks, man. Thanks. It's always nice to be here. And thanks for letting me in and sharing the trades, asking you a couple of questions.
I'm going to pop it on Zoom here, and let's talk about, you know, what's going on, man. Like, did you want to go over some trades that you took? Yeah.
So this morning it was just like the analysis that you gave on GJ. So when I looked at the daily and moving on the lower time frames, I could see that we're kind of in an uptrend from like the last 2 weeks. We did a retracement, and in the beginning, I was like, in the beginning of the pre-London session, there was this kind of a downtrend that I didn't want to sell. Do
you want to share, or should I share my charts?
Yeah, let me share my.
I just want to give people a visual of what you're talking about.
1 second. You see my screen now?
Oh, you're not sharing.
And there you go.
There you go. Perfect. Yep, you're good.
Yeah. So this is where I came in this morning, and this is the time at 6:30 in the morning, like London time, and I started by just what you went through, that we broke market structure right here. So I was convinced that we are kind of going on an uptrend, even though on the higher time frame it seems like we are squeezing into that area. this is on a on a daily, on a 12-hour. So I didn't really want to sell against that support right here, even though it was tempting on especially on the 15-minute. I like these kind of candles right here, but I waited. I had some good discipline, so I just kept waiting for to see a reverse what's happening right here. So we clearly rejected that level. And then, and this is the candle that I was waiting for. It came out in a little bit late because I was like, I didn't want to be stuck into that range. So I wanted to break these previous highs on the 30 minutes, which was a good confirmation. And then I was expecting this kind of volume coming in to break this resistance, because there was no other direction basically than either to consolidate, but this candle was pretty strong to give a clear confirmation that the move was going up. And so that was the good the entry right here, and yeah, so it was a good idea just not to be fooled by this move and to wait for the bias that I had previously established, that we are going on a bullish trend for the day.
That's
until the CPI.
I'm really glad that you brought that up, because that's actually a very important lesson that I for people. So I'm going to share my screen and then show people what I think about that, because I think that's a really good analysis, and something I want to show people. So because I talked to you about this before. Is you and Birta had the same exact trade. It was maybe a week or two ago, and you guys took the short when I was waiting for the overall long. And the thing is you got to understand where you're at with market structure, and I'm glad you waited for that trade, because that was a good wait, right? So if you understand that, and I saw you had the same line drawn, this 162.500 area is the main point on like every time frame, as far as where the major point of control is for GJ. And so when we had this massive bullish close yesterday, you could have anticipated that we were going to come back down and retest, which is what we were doing on the lower time frame. So if you look at the 15-minute, I know you were looking at the possible short area right here. So you could have anticipated that we were going to come down a little farther, down to like 162.500. But if you think about it, that was, like you said, pre-London. And so we're heading into potential London volume. And so what you can expect is that London volume is going to drive it in the direction that it's supposed to go. And really supposed to go is, what direction are we heading in right now? To higher time frames, like you said, had a massive rally off of the September lows. Had this nice decent pullback to retest market structure on the daily, retest this reclaimed 160.500 area. And then we had a really strong push through. And so we have obvious in the last couple weeks, even last month or two, bullish momentum in the market. And so this 162.500 was that retest point to then continue higher. And so, you could have looked for a potential scalp play, let's say like 30 pips to the downside to catch this retest. But assuming that we were heading into London volume, you can assume that London volume is going to drive price a lot higher. We're creating our liquidity grab, our retest, our lower wick on the daily before we then rip higher. And so what I would have, hindsight bias is 2020, but the ideal scenario here is after we had printed, this 330 candlestick right here, we had that bearish retest. Along on the break of these highs here would be probably, in my opinion, the perfect entry to look for a continuation, stops below that low. And at that point, I'm looking for either a Fibonacci retracement, or I'm looking for structure to the left to see, where a good take profit would be. And I mean, now, this is, I'm obviously hindsight biased, so the clear take profit is going to be this pivot point up here. At this 164.400, but I mean, you get the idea. As far as your potential take profit on this move was 150 pips, because we're in bullish momentum off of volume, versus your potential take profit to the downside off that short was 30 pips with pre-New York volume. So it's important for people to understand that you got to wait for the optimal trade entries, which in this case is going to be the trading with the trend, bullish volume right here. It's coming back down to retest, creating a lower liquidity wick for a potential 150 pip move to the upside with the clear volume and trend that we're in. And so I think it's important to realize that, and to it just, trading becomes a lot easier and less stressful when you actually start trading with the trend and stop trying to fight it. And so when you saw that we had this break here, you had this London session volume break, retest, break of these highs, that would have been a clear indication that, hey, we're heading higher here. So I'm glad that you waited on that one, and you didn't get sucked into the I need to trade this pre-London volume heading back down to support kind of deal here. And then in that case, if structure wanted to flip and we head down and retest the backside of 162.500, then you have my blessing to sell all day long. But as far as I'm concerned, while we create support here on the upper end here, we're going to look for a continuation. So you got to understand where the bull bear neutral point is, where who's in control at what point. And it was clear that 162.500 is the point of control for the bulls, and so we drove it right out of there. But yeah, so that was a really good lesson, and I'm really glad that, holy shit, yo, is there volume going on, like news going on right now? This is just honestly like, I don't even know what the fuck. Taz, do you see any news?
And this is another thing. This is one of the questions I wanted to ask you, because it's been happening lately, like more often than not. Then all of a sudden, at a time that you expect a low volume in London session, and all of a sudden you get these crazy moves, and it's been happening for the last 2-3 weeks. Usually, from watching GJ, the volume usually rang out at like 9:30 London time. But look at this; it's not slowing down, and it keeps on going with no news, without any events. So something has changed lately.
You're right. Something big has changed. And here's the thing. So here's the thing is, you can obviously tell, and I agree with you, the last, I don't know, couple months has been, the daily range on GJ has been absolutely absurd. Like, stop losses are like 50 pips. Daily ranges have been like, this one is 500 pips. This one's 400 pips. This whole range here is 400 pips. This whole range here is 300 pips. While before the volatility came out, we were only sitting at like 150 pip daily range, 120 pips, 113, 170. So it's like doubled the daily range in the last couple months. And I can tell you why. It's because of the shit that's going on with Japan, as far as the yen is just, the currency is getting absolutely obliterated. The pound, they're in a fucking conundrum right now, because they are doing their bond buying while trying to hike interest rates, and so their interest rates are going through the roof. And so there's so much volatility in the market, like all the asset classes. There's so much volatility in the world and overseas, what's going on, that just like you're seeing that volatility translate into the currency market. And so you could see that presence the last couple, even I guess the last month, we'll say. So last 4 weeks since September, beginning of September, we're now beginning of October. And so that's like one of the main reasons now, this is a little, that's the thing is like, you're right. We've been seeing this volatility, like you just see it out of nowhere for no reason. And honestly, like the volatility is one thing, but to break through a major structure point that we've had on both sides of the table at 164.400, that's just something different. Like, it's normal for me, at least in the last 4 weeks, to see this kind of volatility. But to see volatility break right through levels like that, just kind of, it's just a different market right now. It's weird. But
yeah, one more thing, if anyone have noticed, which is funny, if like how GJ lately has been acting like a market general compared to the other pairs that includes the pound. Because if you look up at GU, GA, and the GCAD, it's like copy paste. They're like really copying every single move that GJ is doing, and it's just it even looks funny.
Oh, 100%. And I could tell you why. Look at the pounds, the gild, the 30-year. So you know how we translate the 10-year rates for the the US 10-year rates to the dollar strength and get the dollar and everything. You have the gill, which is what the UK is trying to fix before their fucking economy crashes. It's things like it's soaring here, and so you're seeing across the pound, extreme volatility here in the pound yen, pound AUD, like you said, copy and paste, extreme volatility, pound USD. So it's like the pound's just kind of taken over here, and so you're seeing the same thing across the table. Simon, got some headlines going over in UK. Looking at a return to the mandate from the leadership contest. No clarity on the time of the announcement if it happens. Active discussions underway in number 10 over whether junk parts of the mini budget. Russian tax and Newton tax. Okay. Fuck yeah. I don't know. But you're right. I mean, look at pound AUD here, pound USD. They're all just freaking ripping here. So it's interesting. Interesting. Gold's at the upper end of the range here. Actually, very tempted to short here. 5 minutes. Oh man, I want to short here. Um, 4 hour coming to some resistance here. It's tempting as we come up to fill this move here from Tuesday. We're actually right about filling it, so it's tempting to take shorts here in front of this bullish push. Damn, it's so strong though. Like I can't. Dude, the market's crazy right now. I might just have to wait till CPI because I don't want to dig myself a hole in front of CPI and then have to sit out in CPI because I'm already in a freaking hole. I'm gonna wait, but I'm gonna demo trade this. So I'm gonna say that Liz Truss has been told by her most senior advisors that she needs to rip up last month's mini budget and raise corporation taxes. The price of restoring market confidence in her government. Yeah, nobody fucking has confidence in Truss. Ever since she joined, she's just been batshit all over the place. But for gold, I mean, shorts look nice, but I'm not going to short it right now. There's too much volatility in it, and this thing could just keep ripping. So apparently, Jesus, what is there? A lot of headlines? Downing Street insisted the tax cuts would go ahead, but one government source said privately that could change after the Prime Minister ruled out spending cuts. And we got our own news blotter in here, Simon. He's like our freaking Interesting. Oh man. Dollar is whoa. What's going on right now? They leaked the CPI print? What the hell? Like, I don't understand. We're getting some crazy volatility in front of CPI. There's got to be something else. Trust, there will be no farther U-turns on economic plan. So if there's going to be no further U-turns, right, that means that they're going to stop bond buying Friday. Yeah, that's what I'm saying. Yo, the dollar, I mean, in theory here, CPI is going to crush expectations and cool off massively because the dollar's ripping right through this 113 level. The ES is just starting to tear here. I mean, dude, this is fucking crazy. Because in theory here, if we have a really good CPI print, then, you know, a Fed pivot could be on, you know, on the cards here. And so we'll see a dollar fall, equities rise. So what's a 3% rise? 5%. So I mean, we could probably hit 3,800 if we get a good print. I think we hit 3,800 if we get like a cooling off number, like 8.0. If we get 8.0, then I think we hit like 3,800. I don't want to break out yet because I want to trade my gold system. I want to see a circuit breaker. Let's feel a circuit breaker. Yeah, so yeah, you need like 7% for that. So 7% circuit breaker would be around 38.50. What's the exact price of the close? So the exact price to close 35.8850. 35.8850. 7%. So around 38.39. So 38.39. So we hit this orange line here today, which I'm on the daily chart, by the way. So we would see a candlestick, like one daily candlestick like this. That'd be fucking nuts, dude. Can you imagine? That'd be nasty. Be nasty. I couldn't even imagine that. Gold, if gold starts breaking out, I think we could be seeing 1,700 come into play for gold here. I mean, that'll be around a freaking, that's not even that crazy. We could probably see like a, honestly, a 1728 I could see. Why'd you draw it like a condom? Dude, I can't, I don't have a straight, oh my God. my hand's crooked. Where's Mike with the stiffy bar call? Mike will be on soon. Probably, if I had to guess, probably around 8:15, closer to CPI. He doesn't like to associate with us, futures and Forex guys. So he'll probably get on here as late as possible. I'm convinced he feels threatened by us because, you know, we're just gang. We're the best. Oh, man. Yeah, dude. I don't know. I mean, honestly, Simon, I'm kind of with you. I'm feeling like it could be a really fucking good print today. Like, I was initially feeling that, like, dude, we're going to have, like, a nasty, like, hot print again. Because there's nothing in the economy that's indicating to me that we're going to have a cool off of inflation. I mean, gas prices have been rising again. Energy is getting more expensive. I mean, we're seeing consumers still get crushed. Unemployment was heavy, was bad. So we're seeing just recessionary factors come into play as far as consumers getting crushed, employment rising. So it's we're seeing recessionary indications, and we're seeing higher prices. So I was like, I don't really see inflation beating expectations, but if the market starts running in front of CPI print, people are going risk on in front of a very risky event here. So, I mean, honestly, this could just be shorts covering in front of the event. Honestly, like, you know, people have been short for a while. It's a big event, so that we could just be seeing some short covering here, which is why we're seeing some pretty big moves in the ES. We're seeing some big moves in gold. People are covering their shorts and getting flat for the position. So, I mean, that's more of a possibility to me than anything else, because I don't think people are going to be anticipating anything way too much to anticipate. So this, where we're at now, is a pretty strong area that I'd like to see the ES maintain as resistance 36.36. And then to start filtering it back down and consolidating at 36.10 area. Because I still expect a hot print. But if the market starts breaking out in front of CPI, then I could be swayed otherwise. But give me a better short. Yeah, it might be giving me a better short opportunity. Borderline's in the chat. We got Borderline. Inline probably not going to be good either. And I expect slightly hot. Yeah, I agree. Inline, I don't think is a good for the market either, because everybody's expecting it to cool off a little bit. They're expecting what, 8.1 from 8.3. But like even inline, like we want to see it really cool off if it's good for the market. And so I'm in agreement with you. If we see inline, then I don't think it's good. If we see hot, which I'm expecting as well, slightly hot, maybe 8.3. 8.3 is kind of what I'm expecting. Then I think that we're seeing a down 5% day in the ES. Has Bitcoin moved at all today, dude? Oh shit, Bitcoin actually, yes, dude. Bitcoin is dropping. Look at the intraday chart here on Bitcoin. You know, it's so interesting here. Where's Mal? Get Mal in the chat here, because Mal, I know, likes to talk about Bitcoin and SPY being in correlation as far as, you know, risk on. But if this is any indication on what's going on with risk on investors here, Bitcoin's dropping through levels here, and it's hitting extremes here. So I don't know, man. People are just puking out of their positions and going risk off, obviously ahead of CPI. So I think what we're seeing in the ES right now is just profit taking from the shorts. I don't know what happened to Bitcoin. I'm telling you, people are just getting out of their positions. Oh, Chris, what's going on, man? Good to see you. Good to see you. Got the whole gang today. Could be hedging in ES while Bitcoin dropping. Who the hell's going to hedge in the ES, yo? Oh, you mean like people maybe hedging their shorts? Yeah, Bitcoin should be up there, right? Good inflation hedge. Well, dude, hang on. Do you know what market we're in right now? The all-time inflation hedge, gold, which, by the way, we're like in massive inflation territory if you didn't know, is like just been tanking. So come on now. The new inflation hedge is the dollar. Come on. The inflation hedge is the dollar. It's whatever the consumers want it to be, and they chose the dollar, the almighty. Gold and Bitcoin. Where are these NFT hedges at, though? God, dude, yeah, NFTs. I mean, poor Ethereum. I honestly had some hope for Ethereum because they were backed by the NFT market, but NFTs have dissolved pretty heavily. And actually, Why is this control not working? Oh, it's shift. Dude, Ethereum's breaking some dangerous territory here. So there's NFT hedges. Yeah. Chris. And you know what, Chris? The only two people that are trading Bitcoin right now just shorted it. You know, 6 o'clock, it took a nice little whoopsie daisies here. So risk off in front of CPI, which is in 30 minutes. I have my tweet deck on over here. Got my chat trading platform. I got this whole setup. I am ready to fucking go today, dude. I am locked and loaded. I'm not even fucking around, man. Traders price in less than 100 basis point bank lending hikes in November. Fucking no shit, dude. Of course it's less than 100. The hell are you thinking? They're gonna hike 100 basis points while they're freaking buying their bonds? Sounds a little counterproductive, doesn't it? Alrighty. Let's see what's going on. A plan to scrap the interest rate. A plan to scrap the interest paid on some deposits held by commercial lenders at the Bank of England is not under active consideration, the Treasury says. Scrapping the payouts would be a tax on banks. So yeah, so of course they're not going to fucking tax themselves. Why would they tax themselves? Retarded. You think the government's going to tax themselves? Oh man. Yeah, this gold short looks like it could have been working out a little bit. Could get a nice filter from here. Let's see. ES dollar. I don't know, man. The dollar's fucking. I feel like it's pulling back for people to get a better price around the 112,500, and then we just rip from there. Let's see. Oh man, dude, it's like, where's the last? Hang on, last CPI print. What was the date? I want to look at price back then. So last September 13th. The previous was 8.5. They were expecting a cooling off of 8.1, and it came in at 8.3. So that's kind of what I expect today, right? Previous was 8.3. They're again trying to predict 8. Look, at this point, they're eventually going to be right? They'll eventually be, oh, it's cooling off. So you're right. If it comes in line, then that's not good news for the market still, because it doesn't mean that really anything. So September 13th, let's look at the dollar on September 13th when it came in hot. This was the dollar right here on September 13th. So as you can see, actually, let's go down to lower time frames on September 13th and see what it was doing in front of CPI print. It's actually kind of doing what it's doing right now. So it's at September 13th is right here, right? And so the dollar was filtering down in front of CPI, and then we had this massive explosion. So they're pushing the dollar down to get a better price, and then had that massive explosion. And so looking at the dollar now on the lower time frames, you're kind of seeing the same thing. Price is filtering down to get a better price, retest structure here, and then you get that massive explosion. So kind of expecting the same thing. Of the last 9 CPI prints, we finished the day green only twice, and usually down by 1% average. Yeah, right. I saw that. So yeah, it's kind of feeling like the same situation here. I'd expect probably 8.3 is what I'd like, is what I'm expecting. But honestly though, anything above 8.1, expect it to be really bad for the market. and see the dollar sort of highs. I mean, we'll probably see the dollar. So how much did the dollar rise on September 13th? Because it's probably going to be equivalent to that move. So you saw a peak to trough, because that's where it was when CPI came out, a 2.15% move. And so peak to trough here, 2.15 is going to take us to all-time, well, not all-time highs, but highs since, what, 2002 or whatever, 115.077. So break of 115. So if CPI comes in hot, then you can expect it to start soaring through highs here and hit 115. And Q Mark in the chat. Q Mark in the chat, the Dixie's topped. Where's Mark? Because I'm talking about the Dixie not topping here. And usually when I talk about that, Mark's popping in the chat. The Dixie topped. I don't see him in the chat yet, so maybe he's in hiding until CPI. But yeah, that would be a good idea for a retest of this lows, and then CPI rips it. So gold, if I'm trading gold, then what happened on September 13th with gold? Let's check it out. See what we can expect. September 13th was this down day right here. And so that peak to trough was 2%. And so peak to trough here, yeah, so it would take us right around around 1700, which is what I had said at first in the beginning. So let's take a look at the price action, see if they kind of did something similar, or I guess no, it would be a down day. So give me a second. I'll look at that in a second. September 13th. September 13th. Yeah, actually doing exactly what it is now. It's filtering up towards the upper end of the range here, getting a better price, and then it had a massive tank. So looking at current price action, if we get a hot CPI print again, peak to trough, it was, what I say, 2%, I think. So it would be 1648. 1648 is going to be where you can expect gold to head to if we get a hot CPI print. And honestly, it could be even more massive today, because the fact that we still obviously clearly haven't peaked, so it could be larger than the September 13th CPI print move, because it's more significant. People thought we'd be cooling off by now. The average that they expected inflation to be at is going to be skewed. It's a lot of issues, a lot of broken things at that point. So I think we could have an even bigger move off of this CPI print than last. So, but we'll see what it comes in at. See. Gotta get a drink of water. Gotta get myself pumped up. All right. Let's see here. We should have had a Zoom party for this. Like, everybody should have hopped to my Zoom, and we could have just had like a nice Zoom party. We had a nice little party on the stream with everybody. See what the ES. So September. I didn't analyze the ES. So September 13th. Wow. So this was CPI, the last CPI here on September 13th, and that move was peak to trough 5.5%. So let's see what the market was doing on September 13th, heading into CPI, right in here, doing it exactly. Everything is kind of just like clockwork. Doing exactly what it is now, rising up, filtering up into CPI, and then a massive tank, so getting better prices on the shorts. And so what you're seeing now is it's filtering up, giving people better short prices, and then it's going to tank. Two brown dogs in the chat. What's going on, man? Good to see you in the chat. So if we are equivalent to the September 13th CPI print move, to the downside on the hot CPI is going to give us 5.5. So that's going to give us around a move to 34.30. Mike is finally joining us. And we'll have to see what we'll get Mike in here, guys. And we'll see. Now it's a party.
Hey, testing. Can you hear me, Ty?
I can hear you loud and clear, Mike. It is a party now, baby.
Well, I don't know about the rest of you, but we just had the trade of trades in our trade room today. Just on this nice little spike up. I'm kind of pissed off because I was kind of hoping this would happen a little bit later.
Right.
But, we talked about it on the show yesterday about focusing in on the Bank of England and focusing on, as far as how Bailey was basically putting trusts into a corner. And, it was really nice that, basically by saying that they weren't going to, extend the deadline. So that pretty much put the ball in her court. And This morning, the spike up in the futures was pretty much on the news that they're doing a U-turn on their budget.
Yeah, of course. That's all Truss has been doing her entire, I guess, few months of career here is making U-turns and backpedaling off of this stupid...
short 30-day career, right?
Yeah, it's been 30 days so far, and she's already backpedaling on almost all of her policies that she's put out so far. But
this is crazy.
If you wanna take control of the charts, feel free to kind of show us, because I've already talked everybody's ears off about what I was looking at.
Yeah. Oh, look, damn, we got Taz in here.
We got the captain in the house today.
Now, I didn't know the captain was going to be in the house.
We're in the presence of the captain of the captain.
Man, I would have brought a gift. Had I known that. Are you in? Taz, are you in Dubai or Germany? Where are you at these days?
Yeah, today I'm in Dubai.
Dubai, awesome.
Yeah.
Dubai, man.
Awesome.
Taz said he's going to give me a free ticket business class on Emirates to Dubai.
I would have. Yeah, we're gonna have the Vant seminar. Yeah, we're gonna have our Vant whatever you call it, end of year party in Dubai. So we expect something good from the captain. Well, I'm gonna take over the charts. Look, this I see Bornheim in here. Yeah, things are different this time with where we are in CPI. And look, and I'm gonna. Can you see my charts, Ty?
Yes.
All right. So let's back it all the way up. And I didn't want to go that far. But anyhow, real quick, why don't you start off where we are on the 4-hour chart right now with basically where we'd open, where we kind of bottomed from.
Yeah.
Because I think it gives a good basis as we go forward.
Yeah, it's interesting because yesterday I painted the picture as far as we're seeing us sit right underneath these June lows, and we're seeing this price consolidation right. And so before we were under June lows, right, we got dip bought right through it, and that, in my opinion, was a nice liquidity grab. But at this point, we're actually now consolidating under June lows, and we're actually sitting under here for longer than we have before. And so what I'm really thinking is we actually now saw this 4-hour coming up into this rejection zone here. So it's either getting really tight into this zone to pop through on goods on cooling numbers, or we've been sitting under here ready to continue down off of hot CPI. So we're really in this tight zone here.
Yeah, as we expected. And what's different about this report is, like Boyan was saying, we are a different scenario than all the previous reports. We're pretty much up here during the last CPI report, then we got kind of shot down. So we were kind of more in a temporary,
bounce.
pushback. Yeah, bounce. Mm-hmm. in a bear market. This time we're coming into the CPI report at the bottom, at lows. So it's definitely gotten tight here over the last 5 days, and this is going to pretty much give us some good direction for where we're going to go. As we always do on these CPI days, we got to figure out what is a good area of to kind of focus in on, and you can kind of see here this is that sideways consolidation. We've been from this 3660 to 3580 level and just really tight in here, and the ATR is kind of squeezed on the ES. But if you look at the 15-minute, we have kind of rounded that bottom. We are above the 5 EMA on the daily chart, so temporarily bullish. I'm looking, obviously, maybe running into some congestion right up in here going into the CPI report. So we got about 20 minutes going in.
36.39 right there is also the June lows, 36.39. So that's also the same area that we're running into.
Yeah, absolutely. Yeah, and you can see those June lows right here. This Friday's low has been a major area, and that's where we kind of rejected from the first run up here. This was a great trade. I love when I start a day out really good, and my alerts went off. You see the news, you hop in, and you take the ride. So we're sitting in a pretty good position here. For me, look, we know how to trade these things, right? We've pretty much, we let the move do what it's going to do, and then we're going to draw our Fibonacci retracement, and then we're just going to go based off of what the market gives us. But I think the market's kind of poised here. And don't forget, we've been talking about the dollar. I'm sure you've been talking about the dollar in here. The three horsemen we've been talking about is the dollar, the TNX, which is the 10-year rate, and then, of course, the VIX. And this is the yield curve here. But if you look at the VIX, I'm going to pull that up. Sorry about that, guys. If you look at the VIX on the daily chart, we're now, we've talked about every time we've been up in this area, we've fallen off into some nice rallies during this bear market. So, we pierced up here, had a nice, 2.5%, 3% rally last week. And now we're back up in this area again. So CPI is going to really tell the tale. So you want to watch the three horsemen, you want to watch the VIX, you want to watch the 10-year, and you want to watch the dollar. And yesterday, the gilts were down, right? And the pound was up. And, we are seeing the pound rising today and the gilts falling again. And again, obviously something was known, and the UK market pretty much is feeling comfortable that this turnaround was coming. So I guess the devil's going to be in the details on that. And I think, if it wasn't a CPI day, I think you would see the dollar drop dramatically on this news, because I think you can get, if they're going to solve this problem, and we still have an issue of the Bank of England, if they extend the deadline past Friday, I mean, look, that's going to send the pound soaring. That's going to send the gilt down. It's going to also bring our rates down. I think you're going to see a bond rally out of that. And I think you can see a dramatic drop in the dollar, a nice drop in the 10-year, and that could spur a nice little bear market rally.
I was fucking muted. Well, but anyway, we're at a strong.
Love it, man. It's at least once.
Oh my god, dude! I can't.
I hope you don't do the same thing, because I can't have two people that are constantly muted. But anyhow, Ty, you're giving a great analysis. If you give that analysis again, please.
I was saying, fuck shit, that we're at an interesting area right now because with the Bank of England, I was saying Mike had a spot on analysis because with the Bank of England, with where we're at now and where we're at with the VIX and where we're at with CPI, this could potentially be a start of a capitulation in the market because the CPI print was right here last time, and we had a really strong rally out of that because we had a really hot CPI print. And right now, the VIX is floating at these 34 highs. So if we get the same, hot.
That is so true.
I can't. It's so funny. If we get the same CPI being hot, then we get the Bank of England potentially not extending their bond buying, then we can get that VIX spike through 38 and get a potential start of capitulation in the market. So VIX is at a very strong point right here. It's really like a do or die moment for everything in the market.
Yeah, I agree, Ty. And look, let's start talking about and give a little preview of what we're looking for on CPI here, because I think it's important. First off, I want to show you, I'm going to share, we had PPI come in yesterday. It pretty much came in line, maybe a little bit hot. But there's been a pretty good correlation between PPI month over month and CPI month over month. Matter of fact, it's been about a 78% correlation. And if you look here, you can see, the red line is CPI, the PPI is, it's green line's PPI. So you can see this correlation, and you can see, how tightly it has been correlated. We do have some outliers in here, but 78% correlation is pretty good. And typically what you would want to see, typically what happens, you would expect, look, you can't expect CPI to drop dramatically with PPI still rising.
Right. Yeah. Because then you're not going to, the companies are not going to, they're going to pass over the higher costs to the consumers. So they're not going to eat the costs. So you can't, right.
Yeah. And so I get a lot of questions. Mike, have you guys been, pretty spot on with your CPI predictions and stuff like that? Well, because it's not hard. We traded through this before, right? A lot of market participants haven't seen inflation of this ilk ever. And so, they think CPI can just float in and out of the economy relatively easy. And, it takes a while for inflation to work its way out. That's why the Fed is so hell-bent on tackling inflation. And we talked about this, if you remember, almost 6 months ago. We said, look, the dirty little secret is the Fed needs to destroy the market. They need to send us into a recession, okay? And that's what needs to happen. So any rally out of here is just a bear market rally. I think it could be a fierce rally, but you just got to treat it for what it is, okay? Right. Because the Fed's going to be out in force, and they can't afford to have the market start rallying at this point when they're so close to tackling. And CPI has been so tight, and we expect it to be tight, okay? So if you look at it, gasoline prices have been rising 19 out of the last 20 days. And if you look at it, through September, the first half of September, gasoline prices have kind of fallen. The second half of September, gasoline prices have gone up. So we expected, the last two CPI prints, we've seen the energy component really kind of drop a little. That's why we've had some drop in the CPI, because we've had the energy component kind of being muted a little bit. We expect that energy component maybe to not be as down as it was the prior to. The other thing is shelter's 1/3 of CPI, and you have OER and you have rents. And, you sign a rental contract, typically it's at least 12 months. So, you're not going to see it. Even if we know rental contract prices have started to slow up from their ascent, from the percentage of ascent, but that doesn't matter. You're not going to see that in CPI until maybe another 6 months. So you're still going to have 1/3 of CPI that's going to be sticky, that's going to be hot, that you're not going to see much of a difference And that's going to be hard because rents are a major portion of what you're looking at. So we're seeing medical prices continue. We did see, looking at the Manheim used vehicle index, looking at that, we saw that drop pretty dramatically. So about 3% is what used car prices have dropped, but we've seen a lot of dealer incentives on new car prices. So we expect an increase of 1% there. So that kind of nets a little bit of that out. But you're still going to see a fall in there. So the big thing is, I think you're still going to see a strong core CPI. I think that's going to stay strong. We're expecting 0.4% on the core, 6.5% year over year. On the headline, we're expecting 0.2%, 8.1% year over year. And you can't predict these things, okay? And you shouldn't try to predict them. But you just got to know what ranges you're looking at. Should the market print a report one way or the other? And I think that's really where we got to go now, because I think if you get an inline report, then you kind of get, okay, maybe it's not as bad as it was expected, and we kind of get something that goes to the downside. But then you could definitely get a bounce out of that. That's, if we go over 8.1%, let us drop. If we go to 8.3%, then I'm thinking you see a 5% down day. Okay. If we drop below 8.1%, I think you got fuel for a really decent up day. If we're below 7.9 or even more, then you got 3 to 7% up day. What do you guys think?
No, that's almost the exact same analysis I was giving before you hopped on. Is if we get anything above 8.1, I'm looking at a 5. I said a 5% to the downside as well. Anything below 8.1, I was thinking. So I had the same exact analysis, and I was really thinking as myself as if we came in line. I think we see a down day, but I think we see a more muted down day. But it just kind of filters its way down. It's kind of what I was thinking, But yeah, I had really the same analysis you had as well.
Yeah, so it's going to be it's going to be interesting. It really is, as far as where we go from here. Especially that now we had the Bank of England kind of throw a little monkey wrench in the trust budget, throw a little bit of a monkey wrench prior to this. So we'll have to see. We'll have to see where we go. I'm still expecting core to be really, really strong. Taz, I'd be curious what you're thinking as far as what we're going to see in inflation.
Captain, come on back, Captain.
Of course, he's probably muted just like you are. So
Captain's hiding from us.
Is the captain hiding?
Yeah, he's hiding. We'll ask him again when he hops back in.
Okay.
What mic are you using?
Who, me?
Yeah.
What do you mean?
It just sounds like you're in a tin can. That's all.
Oh.
Does it jump to my speaker?
There you go. Oh, yeah, that's beautiful.
What the hell, man?
Oh my God.
I got some. That's what happens. I got some janky ass shit going on in this equipment room here. But anyhow, we're traders. What do you expect, man? We're ready to trade.
Thanks.
With Ty, let's kind of expand this out here. We were dead on, by the way, last CPI as far as our trading zones were concerned. It's a little bit harder this time because we've been really, if we break this 35, 71, 75, I mean, we got an open door to pretty much 35.20 is where I see. I think it was 35.20 is the area that I see. There's a major volume zone down there. To the upside, I mean, what are you looking at to the upside?
To the upside, I was mainly looking at around 30. I mean, it depends how. I mean, look, if it's below 8.1, then I was really looking at around like a 37.50 area, which is going to take us right around fill that October 7th move. That's also a 5% rally from peak to trough. So I was thinking right around 37.50 the upside. If it comes in below 8.1 is what I'm thinking.
Gotcha. Yeah. So, to the downside, kind of honing in on this first off, you obviously want to see this 35.72 hold, but, you got this area 35.20, 35.22. This is the next area to the downside. So, I mean, if you're looking where we are now, that's about 100 S&P points, ES points to the downside. And then to the upside, I like the 37.50 area. I think that's a good area. We got some stopping zones along the way, so I kind of like that rate in here as far as our areas to kind of cling to. So it's going to be an interesting.
I'll probably be looking around 34.50 to the downside for myself as far as where my take profit zone is going to be.
I love that take profit zone. Hear that, guys?
Take profit zone 34.50.
It's time for our take profit zone.
I'm already calling it, man. What's up, Mo? Good to see you. Glad to have you.
Nice to see you in there. Nice to see you, Mark.
Captain's back.
Captain? Is the captain back? Captain, man, we went to you. We were trying to get. I want to get Taz's opinion of what he thinks going to happen in CPI.
Well, the same thing that's been happening for the last few weeks. It's just crazy movements. I mean, like, remember when I first started learning from you, you were saying, be careful of those moments when markets start changing character. And the market definitely changed character the last few weeks. We've seen large candle size movements, big volume, unexpected times of the day. And you got to be careful because, it's wild market right now. So you expect the unexpected.
Do you think we're going to be hot, Taz, on inflation, or you think it's going to cool off a little bit?
I'm not really optimistic of what's happening because every time I go to Germany, I try to follow the news in Europe as much as possible, and it doesn't look good. And,
right.
And then I follow what's happening in the US. So I'm not really optimistic about what's happening with the inflation. And I don't think the situation is going to get any better. But that doesn't mean that we cannot use it for our benefit when it comes to the market and trading. We just need to be smart about our approach. That's all.
That's right.
Yeah, I agree. You just got to be prepared. Look, I mean, we've been pretty good on our analysis of where we think inflation, where we think the labor market's been kind of going. We've had a good pulse of the market, but it doesn't do you any good to really try to get tops or bottoms. I just you got to know your zones, and you got to know how to react and what it means. We always talk about it to our mentorship group. It's not about just setting levels. It's about how stocks trade around those levels. And I mean, you could see the the PPI report coming in yesterday. I mean, with really where it came in, you expect the market to get hammered a little bit more on that, but they were kind of holding it at the 50% level of that drop. And the fact they were holding it there said, okay, well, choppy day, just don't get chopped up in the day. And it's the way they traded around it. So it's always the market reaction. Because you're never going to beat the algos, you're never going to beat what Goldman and the professionals are doing. The key for you though is to utilize the benefits that you have as a retail trader, and the benefits you have is you can be nimble and you can be quick. You can maneuver easily in and out of markets, and I see all the time how traders are so unwilling to utilize that benefit that they have over the professionals, and you just got to utilize that, and don't be if you get in a position and it doesn't look like it's acting right, man, get out. I mean, and wait for the risk to get a little bit better, because there's a lot of times you can tell when an area you get in that should be breaking, it's not breaking. They're kind of eating through the bids, and then next thing you know, it just falls back down and falls out because there's a seller there. So what you're looking for is to give you an edge. You're looking for the footprint of what the professionals are doing, and you want to do the exact opposite of what most retail traders do. That's how you survive the markets.
That's right. Yeah, what's going on, Mal? I see you're posting Discord. Goldman's gave their predictions as far as what they think. Above 8.2%, we lose 3+% in the market. 8 to 8.2, we lose 1 to 2% in the market. 7.8 to 7.9, we gain 1 to 2%, and below 7.8, we gain 3+%. So that's Goldman's scenarios there.
Okay. Mo, did Mo drop that in there?
Mal.
Oh, Mal did. Yes.
Oh.
But he didn't drop it. He didn't drop it in here, did he? He dropped it in
Discord.
Okay. Somebody tell Mal that the party's over here. Mal is our resident, him and Borlam are resident value kings. So we're getting close, man. 2 minutes and 2.5 minutes and counting. Time to sharpen up your tools. By the way, for my mentorship group, if you guys are in, I said I'd post this the stocks that that are on the trading list today. So you got DWAC, Donald Trump's SPAC, getting a nice little pop up in the pre-market. We'll be watching that one because of it Truth Social getting listed in the Google section. You got Victoria's Secret, you got Finger FNGR, PEGY, IMUX, all of the runners of the last couple of days that will probably be in play. WBA, Walgreen Boots Alliance, beat on earnings. Delta DAL was mixed, and TSM beat on earnings. So that's about that as far as that's concerned. So now, look, guys, we got 2 minutes, minute and a half. Don't get caught up in what the algos are going to do.
Right. Are you gonna share or?
Yeah.
Okay. Yeah. Just want to make sure we get that sharing going right in front of CPI here.
Let's see.
Oh man! Well, last time we were grinding up on September 13th, and then 8:30 hit, so we had a tiny pop and then it dropped. So it's kind of feeling like the same thing. If we come in hot, we'll have a tiny pop above highs and then a massive drop.
Yeah.
Oh shit! What's this ES doing?
It's right. Well, they're shooting the buy stocks.
They're doing, yeah. That's what I was like. Wait, they're doing what I just thought they do: run the highs and then drop. Okay.
Yeah, they're shooting the buy stocks.
I was like, wait, did the print come out already? Got nervous for a second.
Yeah, we still got some time trying to get these. You got the dollar in here. You got TNX. I'm going to be kind of following what's going on with rates in here. Obviously, we're going to be following what's going on with the dollar. It's going to have a big play, and there's a good chance.
Oh man, I'm feeling it, man. It got the jitters going. 20 seconds left. Whew.
Well, let's see.
10.
See what we get, man.
9, 8,
It
7, 6, 5, 4, 3, 2, 1. Oh! All right, what's going on?
All right, you gotta wait. There's usually a lag.
I gotta see what the print was.
Seeing the dollar shoot up. That's all I know. I tell you, man. We're getting a lag.
What's the market doing? It just paused.
Yeah, markets.
Dude. Oh shit!
Yeah.
Oh, yo, the print.
Came in here. There we go, guys.
Wow.
Down we go.
Holy shit, down we go. Wow. Holy shit. Yeah, we're heading right down to 34.50. Yeah, holy shit. Came in hot. Wow, even Core came in hot. Core came in hot too. Holy shit, yo. Wow, yeah, we're heading right down to 34.50 at least. This is a 5% down day, no problem.
Oh, look at that, man. Nice trader. Nice trade in there. I'll take that trade right there.
No problem, 4% down day on this one.
Oh, here we go, baby.
Yeah, dude, this thing's going right down. We were hot on CPI, or Core even, which we thought was going to be cool.
All right, well, look, they took us right down to the 35.22 level, this area in here. That we were looking for. Yeah, I mean, this is crazy. It's hot, hot, baby. Dude,
wow.
We could be in for a limit down day today.
We could be. Look, 8.2% it came in, expected 8.1. Core came in at 0.6, expecting 0.4. Headline came in at 0.4, expecting 0.2. So came in hot as shit, and that is no sign for a Fed pivot. So we're heading down to like 34.50 was my price target.
Yeah, there is no Fed pivot here. Matter of fact, this is not good news for the markets, and very muted reaction as far as what I could, here they're kind of, be careful because, we should see a bounce in here, hopefully. You got the dollar. Look at the dollar running.
Wow, dude,
you got
this is incredible.
Rates over 4% on the 10-year. Here we go,
Dollar's
baby.
going to break 115 today.
Well, you know what's great? I don't have to trade anymore today because I actually hopped in. I know I told you guys not to, but I hopped in here and took a little bit of a ride. Look at that, man. Still getting prints coming through.
Wow.
Yeah, core 6.6%.
That is just, dude, it just shows you that, we're absolutely doing 75 basis point next month. Do we do it in fucking, do we finish
Well, here's
off?
the bounce, guys. Here's the bounce I was talking about. Look, our area, these areas work really well. Isn't it amazing? Sorry. But, again, I mean, this is, again, we feel we should get a nice pop down. Now, let's see. I'm not sure the move's over yet, but, we had 830. We pretty much fell from here.
Over.
So if we kind of throw some Fibonacci's in here, Tyler, I guess we can kind of get ourselves, and I'm going to zoom in here, see how some of these freaking lines just staring us in the face. But, this 50% on the Fibonacci, obviously an important area. Just let the market shake themselves out. And because you got the algos now. You always have, it's kind of like a Fed move. You have the 3 different moves. But going through, again, core 6.6% year over year. 4%. Wow, 0.4% on the headline. Pretty crazy stuff. So from a macro standpoint, guys, this is not good.
No.
Okay, this is not good. So we've now had a labor report come in that was pretty bad as far as labor still being tight. And this is going to have the Fed governors all in an uproar here. So, Taz, what's your I don't know, man. I think we could see a limit down day today. I don't know. We'll see. We are so oversold going into the print. That's the one thing helping us out. And we haven't seen those capitulation days. So, I mean, I don't know. What are you thinking, Taz?
No, an old lesson from where I started to learn to stay away from the news, to stay away from these kind of crazy moves. I'm not trading that. I'm just going to wait to maybe trade the reaction of the reaction.
Yeah, that's. I taught you well. Tyler taught you well.
Yeah.
No, if I taught him, I would be teaching him how to trade this bitch.
No, listen to Taz here. I don't know why I got this. I should set these charts up a little bit better. Sorry, guys. I'm going to delete this.
Limit down to be around 33.36, 7% down around.
Yeah, and we haven't seen it. We haven't seen it in this bear market. That's been one of the problems, why we haven't been able to call bottom in here, because you just really haven't seen this. And I'm tell you what, I'm going to draw this because you don't have the extensions. I'm going to redraw this from the top. No, I did it from the top, so I'm going to redraw this from the bottom move here. And that way we'll get our extensions to the downside because, we're definitely leading downside momentum in here. Yeah, I mean, look, very slow action in here. You do have some orders flying through. If you look at your level 2, though, in the ES, you can see they're flying through bids. They're chewing through bids as we speak. The dollar, pretty nice rise in the dollar. Ty, why don't you take over and share and show us what's going on in gold and stuff like that? What what your take is, what we should be doing in gold.
Sure. Yeah, I'll share with the guys. I won't be able to take over your share. Actually, I can because it's my Zoom. So yeah, basically, really kind of doing what we expected here, and I mentioned that. So if we get a hot CPI print above 8.1, we did. Then I expect us to go up and rally through the highs towards 115. And so, I think we'll get this rally. Now, what I'm looking at here for the dollar is this should be an event like last CPI that we really don't come back and retrace to, because this is a fundamentally changing event. So we should continue through here. And so I'd want to see 113,500 hold if we get a continuation out of here, which is most likely because, this is pretty freaking hot. So you want to see 113,500 hold in the dollar, and then we'll get that continuation through 115 closing by the end of the day, because that'll give us a similar move from the last CPI print, which is around 2%, 2.15%. Around that, and that'll take us to just over 115. So dollar pulling out strong here. Looking at gold, gold's not dropping as much as I thought it would, maybe because it's actually an inflation hedge, but it's still dropping. I'd expect it to still continue to drop and leak today. We are still stuck in this range, surprisingly, and it's not moving much, but I think once we get more of a the price, the number settles in, people are digest the information, what this actually means, because this means a lot, right? Because if you think about it, we've been hiking, and people are saying we need to stop our hiking because we're crippling everyone else's economy. But our 75 basis point hikes, what we've been doing, haven't done anything to even core inflation. Core inflation came in hot, which is what we can affect, which is what we can help control, and so it's not doing anything. And so it just says we need to hike even more. Like we need to go like maybe 100. We need to hike even more. And so that's saying a lot. And so I think once people start digesting what's really going on right now with what this print means, then I think we get that continuation even tomorrow and following week. And so I think this sets the pace for a pretty decent continuation for gold's downward action and the dollar to continue higher through 115 is kind of what I'm thinking. But what do you I don't know, what do you think, Mike? Because this number really says a lot about the Fed and how it's affecting core CPI here, and I don't really think that. I don't know what
look, I think that that this should not have been unexpected.
No, absolutely.
And I think the Fed knows that. Look, it took, the last time we had inflation of this ilk, it took Volcker two recessions to kill. And I kind of talked about this maybe a month ago, that be careful. I think we could be in for a double dip recession. Meaning that, okay, maybe we had a small little recession, if you want to call it, 2 consecutive quarters down, starting in the first, second, third quarter, right? And then maybe get some positive growth come out of the third quarter, fourth quarter, and then you get the second recession, the worst recession coming in 2023. So, the problem is, and I laugh, guys, be careful. Information is so easily accessible, but the quality of the information has never been worse. Right. And you go on Twitter, and these people, the futures are up. Oh, you're going to buy. It's just they don't have no idea what they're talking about. We run a fund. We've been trading for over 30 years, and we pretty much do this since the pandemic to kind of help out our traders. And the thing is that be careful of the information you're swallowing in and taking in, because inflation is a big deal. It's hard to get to work through inflation. It takes total demand destruction to truly get rid of inflation. I mean, and with the labor market this tight, think about the wage inflation. You can't take salaries away, just like you can't just all in the middle of a rental contract, stop, and lower the rent. Right. And so inflation is here to stay, and it's going to take a good repricing of the markets. And, that's why, for me today, watch the IWM. Okay. And the level I'm watching is 162.78. That is the 52-week low. It's the only indice that has not pierced through its June lows. Okay. Yep. So if you see that indice finally capitulate, then that's what I think will really help you out.
I completely agree. And one thing that's interesting to me as well is, what could even kind of support the capitulation is, I know Mal's going to be excited me talking about this, is Bitcoin. Bitcoin's dropping off pretty heavy today, and Bitcoin is now at 18,000, the 18,000 lows, where we've had that massive dip buying come into play, a massive support area. If Bitcoin gives up this 18,200 area that we're kind of supporting right now, and we get this continuation, the risk is, this has been, the risk on asset, and risk is going to be off. The market's tanking, could cause some capitulation as well with the crypto market imploding with this. So that's something I'd probably keep an eye on as well if you're kind of in the boat that Mal looks at as far as, risk on with Bitcoin. So something.
Yeah, and it was interesting that Bitcoin was really down while the futures were up.
It was. You're right. I was actually noted that on my show this morning. It was interesting because Bitcoin had plummeted through this 18.95, and I was actually talking to I don't know who it was this morning about it, but it was tanking while SPY was up. So it's very interesting that this was showing you, and this is why I said that. I thought that the market popping this morning was maybe some shorts covering or something, because the risk on asset, which is Bitcoin, was dropping pretty heavy. So, yeah.
Well, you got the 10-year back over 4% again. I want to watch that. That's a key level for me.
Look at that.
That's a key level for me right there. It's hard to be bullish. What's the 2-year doing, Ty? Because, think or swim in infinite wisdom. I can't pull
2
it up.
2 years right here.
Yeah, so I have a long-term target for the 2-year. So it's breaking out of a bull flag.
Right.
Okay. And I see 4.8% on the horizon. 4.6, then 4.8 is kind of where I'm looking at the 2-year to go. And see, you got to understand what you're looking at. Now, everybody and their mother's a bond expert, right, on Twitter now. The 2-year really is showing you inflation expectations, okay? Mm-hmm. And as far as it's also showing you what the Fed policy is going. So I haven't looked at it, but I'm sure the Fed futures for November has ticked up 100, for a 100 basis point move. I'm sure that we saw a tick up in that, and that just basically means that you're going to see a rise in the 2-year. And then, if you look at the yield curve, you're seeing the yield curve get even more inverted. You
can take it over.
What's that?
So you can take it over and show people what you're looking at. But yeah, it's interesting. The 2-year is actually coming up, like you were saying, to the 2007 levels, the 2008 levels, or back.
Yeah, so we're at highs for the 10-year yield. So that's going to be an important component in here. The yield curve, it doesn't seem like it's translating through, but it is coming down because and if I'm looking correctly at this, so we have the 30-year up yield up 2.59% and the 10 years up 4%. So that shows you that yield curve inversion is not flowing through here on Thinkorswim because they're pieces of crap. But, if you look at the 1-minute chart on VIX, I mean, what's going on with the VIX?
I know, right? The VIX is dropping off.
Is my chart broke?
No, dude, my VIX is dropping off also.
Well, wait a minute. I don't even see a trade. Yeah, it is.
Well, mine's moving.
Off. Yeah, so this is a thing of note.
Weird.
So
weird.
One of the horsemen kind of, diverging here. Interesting. So interesting. So come on, guys, give me your thoughts. What's going on with the VIX? I mean, why are we seeing such a muted response in the VIX here?
Right. Interesting.
That is an interesting divergence to me. Yeah, so I'm looking at Fed futures. It looks like now November 3rd, Fed meeting, that's next meeting, and it just so happens to be the last one prior to the midterm elections. 97% chance now of a 75% basis point hike. The other thing to of note, so a couple things. So you want to watch the VIX, the dollar, and the rates. And the one thing you want to look at today, so we know we've had prior to CPI a nice little drop in rates, which means bonds were rising. Okay. So you still got that possibly coming back in play. Now we've cleared out this news event. We now have a new fundamental edge on what we're looking at. So my point is, yeah, that's a good point, Borlam. I think, they could definitely come into play. So it's starting to get a little pop up now, but you got a little bit of an edge in that, you got to watch these. And so what I wanted to say is yesterday we had the 10-year bond auction, very light auction, and with the dollar rising, you have these central banks, foreign central banks, which are the largest holders of treasuries. They're not buying treasuries, they're selling treasuries now. And we've been talking about that. And so they had the 10-year bond auction. We're watching the bond auction. It was weak. Okay. It was dramatically weak. And we had the 30-year bond auction at 1 o'clock today. So I'd be looking at that one as well. It could definitely come into play with what's going on and where, as far as what's kind of butting the heads of, having rates come down. But I'd be watching VIX. I'd be watching the dollar. I'd be watching the 10-year. And I'm watching IWM as it just keeps on just heading straight to that. Now, I think we may get a bounce myself in the ES. I think we get a bounce off of that level, Ty. So I think that could be a trade. That's my next trade I'm lining up. So I always say to be a really good trader, to be in this game a long time profitable, you got to get the easy trades and the relationship trades, okay? That's what's going to give you an edge. And one of the things I'm looking at is, okay, well, if IWM comes down to this June lows and bounces off, we should get a nice bounce on the ES, and I'm playing that trade right there. So we'll see if we get that trade. Right now, just action really muted, and, it's going to be an interesting day. It's going to be an interesting day with as far as that's concerned.
Yeah, I don't know. We'll see a lot more volume coming to play at 9:30. So I think we'll see a nice continuation with the 9:30 volume.
Yeah, absolutely. Once we get rolling, you can't buy. Yeah, I know. You get that, but still, I would expect a little bit of a spike up in the VIX futures. So interesting that we can't get that selling capitulation going on. Yeah. Stuff here. So White House came out. Oh, this is going to bounce the market. We don't agree to CPI is an accurate measure of inflation.
Of course they don't, because midterms is next month.
Well, and honestly, a lot of people were leaning that this is going to be a softer, that they were going to come in and maybe manipulate the numbers. So I guess all you conspiracy theorists out there, if there's a number ever to manipulate, it was this one. And
right, they didn't do a good job manipulating it.
Yeah, either that or they hit the wrong key.
Yeah, right.
Oh my God, it's great. That's funny.
Oh my God.
So I'm just going through the report.
Yeah, exactly, Borlam. Last CPI report before election. It's just we don't agree with that.
What's that?
No, it's the last CPI report before the midterms, and so it's just they're coming out and squawking about it now.
So I'm just kind of looking. I see bear flags everywhere in stocks. So, you know, real quick as we wait for IWM. I think once you get through the 9 o'clock hour, Ty, I agree. I think you'll start seeing a little bit more movement in the futures. But you got AMD kind of bear flagging it. We've been telling everybody, you know, our shorts are really working out well. Well, we're short for solar, ENPH, MSOS. We're short. This thing is going. I mean, this was the easiest trade in the history of the world, Ty.
Right.
I mean, you know, this spike up on the fact they released people out of prison. Come on, are you kidding me? So this thing's going back down to the doldrums. PayPal was a great short. Who the heck's going to open up a PayPal account now when they're freaking, you know, rumblings of taking your money from you? So our short's still working pretty good. Seeing bear flags all over the place. What's Apple doing? Apple bear flagging it. 134. I mean, if you look at the Apple level, we're down here. So for Apple, what do you think, Ty? Because this is one of the market generals that we're looking at. I think you kind of got to look at this zone in here.
Yeah,
right?
100%. I mean, that's where I'd be looking at as well.
Which is where it's in. So, you know, if Apple's breaking these lows, you know, that could be a sign. We're always looking for relationships. Tesla, poor Elon Musk, bear flagging it down to 209. So if you look at the daily chart, 200 obviously is you know, the line in the sand, but also you kind of got, you don't want it to break this area right here, this 2745 to 200. I mean, you know, I'm going to kind of draw this out in here. So I'm going to be watching Tesla to make sure, see if it, you need these stocks to all hold the area. And you say, well, Mike, what's that got to do with the futures? Well, it has everything to do with the futures as we watch the tick in the volume. So right now, Apple's printing 134. So we're all in the danger zone. We're kind of right here. What's Microsoft had broken a key support level the other day. See, Microsoft broke this key support level. Now it's down to 219. Just because we got Mark in the room, let's, you know, pull up Meta, 123. So, you know, Meta, I guess my prediction is going below 100 is going to work out, but we'll see. We'll see. NVIDIA down to 110. Wow, getting close to some areas, man, that I just, it's so hard not to push the button. As far as our high flyers that we gave you guys this morning, Peggy, you know, I expect a risk off day, so I don't expect these things to really, I wouldn't be playing these things to the upside. You're already seeing the risk kind of come off below VWAP. So I would definitely be careful of chasing any of these high flyers that we were looking at, including EWAC. I mean, I was going to short this thing to begin with, but, you know, we're going to kind of stay away. So I think it's going to be an institutional day, as far as that's concerned.
Yeah.
What do you think?
Yeah. No, I agree.
Let's see if we can get this balance. Let's see if we can get this. Come on, man, bring it down before we pop off, man, so we can do a nice little trade.
You're starting to see now gold catch up to where it should be going and stuff, and so everything is kind of catching up now. Oil's catching up, gold's catching up. So it's just
Two Brown Dogs said, man, maybe that's the best they could do from the manipulation. I love it.
Yeah, right. It's probably a lot hotter.
Is Mark capitulating in here?
I saw that. I
know. Mark's our resident bull. If he's capitulating, we may need to buy this bottom.
I know. I was just thinking that.
We'll have to see. Just pretty dead action. Really dead action in here. It's just, you know, kind of surprising, Ty.
I think it's just we had our initial reaction, and I think come 9:30 is when we get that continuation, is what I'm thinking.
Yeah, be careful. Gap rules apply now. So remember, what are gap rules? Well, remember, when you're coming in a huge gap down day, you got a lot of shorts that are going to be ringing the register. So if they haven't done pre-market. So what's it mean to ring the register when you're a short? That means they have to buy stock to cover. So it's not uncommon in a huge gap down day that you get a little bit of a pop up. yeah, you get a little bit. You say something, Ty? You say something, Ty?
No, no,
I think
no.
I think Ty muted me and not
No,
himself.
I muted myself.
Oh, okay.
No, I muted
Oh,
myself.
okay.
I was.
No, well, you didn't because we could hear you. But anyhow.
You could hear me. They couldn't.
Oh, okay. Well, again, trying to work with technology doesn't work for me. But anyhow, I could, you're probably going to see a little bit of a pop up going into the open, possibly at the open. But what you want to see is use your Fibonacci that we drew on our ES charts, and I'll redraw them right here for you as far as the levels that we're kind of looking at in here. So I'm going to go to my 2-minute chart because that's what I love to look at. And let's draw the Fibonacci. That's worked so well for us from each time we traded CPI. And what you want to look at. Oh, sorry about that. You want to look at the 50% level. If you do get a bounce up, how do they handle the 51 if they even get up to the 61.8? I don't know that we'll get a bounce up into that area. Right now, they're pretty much capping us at the 23.6 level. So you kind of want to use your fibs, watch and see, what's going. I mean, you're not getting much dip buying action in here at all, which tells me they just want to send us down. And Ty, your level to the downside was 34.80, correct?
34.50, I think. Let me check again, because 34.50, yeah.
Okay. 34.50. So, keep an eye out on that. And we'll have to look. Just looking at a couple, trying to see if we got any news events going to help us out here. By the way, we did have jobless claims come in.
I forgot.
Talked about jobless claims. Hi, what happened with jobless claims, man?
Yeah, so so unemployment claims came in more or less in line. I mean, it came in a little higher than expectations, but nothing to talk about really. So more or less in line.
So also looking at the CPI report in here, lower year-over-year increase in fuel and oil. And here's the other thing, guys. The next CPI report, that gets reported in November, we knew was going to be hot because the question was were we going to get a dip in this one? And the reason we know it's going to be hot is look what's happened to gasoline since it's rallied. So energy has pretty much gone the other way.
Right.
And that's not really reflected in this report. So October report that's going to be reported in November, definitely going to be a tough report.
Definitely.
So, be careful. I mean, it's going to be hard to really hold on to much gains other than oversold gains. But a lot. The key is if they try to run the buy stops, right? If they try to run the profit stops on these shorts, then you could get a nice little rally today. That's the only way I see a rally. But I think if you get a rally, it's to be shorted.
I completely agree. Yeah.
I mean, we have had, and the other thing we really didn't talk about, we've had 6 consecutive days of loss, 6 red days. So, I think the last time we've had 6 consecutive red days, and we're at 52-week lows, is October 10th of 2008.
Wow.
So you remember what happened in 2008?
I think so.
Yeah. So, interestingly enough, on our 1 o'clock show, we'll have more breakdown of this inflation report.
Yeah, there'll be a lot more to look at and talk about at that point.
Yeah, it's kind of hard to sit here and trade and go through the reports at the same time, but
yeah, we'll talk about it more on the show. I mean, yeah, Dixie's now at that 113.50 level that I mentioned that it has to hold. So if it breaks through here, could get a little bit of a sell-off into the open. But it looks like it's holding as of right now. So
yeah, the odds of a 100 basis point rate hike in November jumped to 17% from 3%. So
I thought this was a little low. I gotta find it, but the IMF said that the chance of a global recession's at 25%. Totally think it's higher than that, but they just came out and said that.
Yeah, well, they
we're already in a global recession pretty much.
Yeah, exactly.
No, the rates
you want
are
to short
soaring,
now?
by the way.
Well, you got the 10-year rates running.
Yeah, dude.
Up to 40.48, so 4.05 on the 10-year rate. It is popping up. It's not falling down. You do have the dollar falling off a little bit. It kind of rejected the 14 area, but we're still not seeing that drop in IWM, and I guess they're not going to give it to us now.
Yeah, we'll see what happens to the Open, but we'll see what happens.
Yeah, I think that's it. So Taz, man, what's your final thoughts, bud?
Captain.
Well, yeah, I've been watching. I'm just focusing on the Forex side of the market. So I've been watching the pound and how it reacted to these to this news. It's just we have a complete correction of the initial bearish movement, and yeah, we're just gonna keep watching. Yeah, just this is again what we said. It's just the reaction of the reaction. So it's interesting.
Mm-hmm. Yep.
Yeah, and you definitely, look, you can't really, the Fed can't affect the energy component. So
right.
They're, they can hike all they want, but the energy component they can't really affect.
Right. Exactly. Cool. Awesome. Well, thanks for hopping in, Taz and Mike. It's been a pleasure. It's been a pleasure this morning watching CPI with you fellas. Everybody in chat, thanks for hopping in. Thanks for your feedback. Thanks for the collaboration on this lovely news event today. It was fun. I appreciate you guys. Yeah, so no live stream tomorrow for me, but I will see you at the 1 o'clock show, and we'll have more to talk about.
We'll see you at 1 o'clock. We'll have a lot to talk about at 1 o'clock.
We'll have a lot to talk about at 1 o'clock. So 1 o'clock, hop on in. We'll have more to talk about. But be safe out there trading today, guys.
Yeah,
and
stay safe.
I'll see you at 1.